Hi, everyone, and welcome to our webinar on insuring manufacturers. My name is Jacob Cole. I'm the marketing coordinator here at CID. Today, Teresa Cochran, our commercial underwriter, will be sharing her expertise in helping you better understand how to insure manufacturing risks. Before I pass it off to her, I wanted to quickly go over the logistics of this webinar. As you can tell, you're all muted, but there is a chat feature, so you can type your questions in at any time and we'll answer them throughout the webinar. Also, a short survey will pop up after the webinar so you can help us improve these webinars for you. So we appreciate you taking the time to fill that out. And without further ado, I'll pass it off to Teresa.
Hi, everyone. Thank you for joining us. The webinar objectives are to be able to identify and understand the different types of manufacturers, understand their risk exposures, and learn what coverages they need, become familiar with the important underwriting criteria for manufacturers, and learn how to properly and competitively insure manufacturers. I wanted to start by giving a brief overview of what the manufacturing industry is going through right now. For the past 2 years, sales have been slightly declining due to not having enough employees, new orders being reduced, low production, low inventory, and slower delivery speed. This industry does expect to have growth if the interest rates can remain steady, and many manufacturers have decided to outsource their manufacturing by importing goods from other countries in order to save on their cash flow. So, like many other industries, these applicants will be price sensitive. It is a common misconception that if a company is importing products and selling them to other businesses, that they are considered a distributor or wholesaler. So I would like to take a moment to define what a manufacturer is. They may import a product from a foreign country. They can place their own name or label on a product. They may alter the product by repackaging or relabeling the product. They may have their own product made. They may have their own product made in a foreign country, and they may also create, produce, assemble, or make a final product or part that can be found in another entity's final product. In my experience, it's the first bullet point that tend to confuse my retail brokers. So let me explain it this way. When your client is importing a product from another country, they are now taking on the product liability exposure of that product. The end user of the imported product will not sue the company in China, Taiwan, or whatever foreign country it came from. They will sue your client's company because that is the company they purchased it from within the United States. Distributors and wholesalers purchase products from companies within the United States. So if they are sued for a product defect, they will then countersue the company they purchased the product from, which defers the product liability exposure to the U.S. company that they purchased the product from. On this next slide, I compiled a short list, but certainly not an all-inclusive list, of different manufacturing categories. The manufacturers I see across my desk typically fit under these categories. Do you notice how aerospace, automotive, and chemical manufacturers are not listed? They aren't listed because those three categories are some of the hardest manufacturers to find a carrier for, and therefore ones I recommend avoiding. I would really try to stick to these categories when going after a manufacturing business. So let's say you're in contact with the owner of a manufacturing company. What types of questions do you think you should be asking to not only pre-qualify them as a good account to go after, but also to understand what their business is? It can be hard to understand the manufacturing industry because there are so many different types, which is why it is really important to ask them these questions. So some of the questions that are running through my head when I'm looking over a new submission to see if it's something that my carriers have an appetite for are, what products are they selling? It's really helpful if the client can provide a website address or a marketing brochure that lists the items they are manufacturing and the types of materials being used to produce the product. What are the products where are the products being made? If the applicant says they are making the products in-house, they will have a need for business personal property to cover the equipment and tools being used to make the products. And whether or not they make the products in-house or are importing the items, they will need to cover their inventory. Who is the end user of the product? This is helpful when the applicant is making a component part or a single piece of another entity's final product. So when someone calls saying that they are making screws and bolts, finding out who the end user is important so that you aren't wasting your time trying to find a carrier for someone who you later find out is making bolts for aerospace clients. I often receive phone calls from my retail brokers saying that they need to place a machine shop. They never know exactly what the applicant is making or whom they are making the products for. And half the time they call me back saying that the applicant is making small parts that are for aerospace or automotive clients. So please save yourself the time asking who the end user will be for that product. The next question is, do they also offer installation, service, or repair operations for their customers? We will want to know this in order to make sure we are covering the entire exposure. If subcontractors are hired by your client to perform these services, that needs to be accounted for on the quote. It's almost like they have a contractor's exposure along with a manufacturing exposure. So understanding their business process will help me to provide you with a bindable quote. What are their annual sales? This is going to be the main rating basis for general liability coverage, and most manufacturing policies are auditable. So it is important to have the client provide an accurate sales amount. What coverages do they need? They may have contracts in place with their clients that require things like excess liability, or maybe they have a loss payee that requires certain equipment to be insured. And lastly, is this a new venture or have they had prior coverage? This will help me as a wholesaler determine what markets I can go to for your client. And we do have a products liability supplemental application that will be really helpful when speaking with your client to gather all the information needed regarding their products and the materials being used. And this application is available on our website. So I put together a few examples of different types of manufacturers for us to analyze together. The first example is an internet retailer that is importing cell phone cases from China with annual sales of $150,000. They sell direct to the customer. However, they are importing the products, so we do need to classify them as a manufacturer. This is a growing company, so they are going to be moving into a warehouse for more space, and they would like to start selling their products through Amazon. They have not had coverage, but to satisfy their lease agreement and Amazon contract, they need general liability coverage with the landlord AI endorsement and a vendor AI endorsement, along with the $1 million excess liability limit. They are also looking to get business personal property coverage for their inventory. And since they are selling online, cyber liability would be a great coverage to offer your client. My coworker Lexi would be able to assist you with the cyber. And if they have employees, my coworker Darby can assist with their workers' compensation. This next example is a grocery distributor and manufacturer. They distribute fresh produce, dairy, and meat products to grocery stores. The fresh produce and dairy items are from local farms, but the meat they sell is packaged and sold under their own label, making them a manufacturer. Annual sales are 40 million and their coverage is being non-renewed because the carrier is exiting the market. I'm sure we've all been dealing with this. They tell us they need general liability coverage, a blanket AI vendor endorsement because they do business with several grocery stores, and business personal property coverage for their equipment and stock. After asking questions about their operations, you would want to recommend offering equipment breakdown coverage, spoilage coverage for their perishable items, business income, and inland marine coverage for the forklift, because forklifts are not covered under business personal property. This would also be a good opportunity to see when their workers' comp insurance is up for renewal and any other policies they may have, like business auto, so that you can insure all of their insurance policies. The last case study is a cabinet maker that also performs installation. None of the work is subcontracted. It is all performed by the owner and employees. Annual sales are $500,000, and they are shopping around for better pricing. They need general liability, business personal property for their equipment and inventory, and inland marine coverage for miscellaneous tools and equipment that are taken with them to the different job sites where they install the cabinets. This is a risk we see a lot of, and luckily we have carriers that are able to write all of these coverages under one policy. So I hope these examples give you a better understanding of what a manufacturer can look like and the coverages to consider for the different types of manufacturers. So some important things to remember about today's webinar is to ask questions and gather information. The more information, the better you'll be able to understand their business and their process. And because these manufacturers are all unique in their own way, they will all have different coverage needs. So we are here to help. Don't feel like you have to figure it out all on your own. Give us a call or send us an email, and we can help work out what options are available to your client. And it looks like we have a question regarding what types of manufacturers we recommend that you focus on. I think it was slide 3 or 4, we had a good list of the types of manufacturers to target. And I can go back to that slide so that you can see the list. So we have food and textile and apparel, which would be your clothing manufacturers, paper goods, liquor, machinery and equipment, wood products, just like the cabinet maker we just went over, furniture, and plastic and rubber goods. If you have any other questions, please type those in our little chat room. Another question came in, do we have a cheat sheet for what questions we need to ask? Yes, we do. Jacob will be emailing everybody after this webinar with the cheat sheet we have put together that includes all of the questions.
All right. Thank you, Teresa. If anyone has any questions that weren't answered during the webinar, now is the time to chat them in so we can answer them before we sign off. After we do sign off, I encourage you all to browse our website. We have tons of tools for you in your office to use, including marketing materials, proposal templates, fillable applications, online quoting options, and a ton of recorded webinars on different lines of business and coverages. Don't hesitate to reach out to Teresa after the webinar. And you can start sending us your submissions to the submissions email that you see on screen there. I'll be sending out an email shortly after this webinar with the cheat sheet and some other great tools for you to use to build your book of business. So if we don't have any more questions, this was a very fast webinar. But yeah, hopefully we covered everything for you. We appreciate you all joining us, and we look forward to doing business with you. So have a great day.
Thank you.